This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Corcel PLC has entered a binding option agreement with Petro-born Oleo A Gas SA to acquire a 20% interest in the IRAI gas field in Brazil, along with rights of first refusal for the remaining 80% of the field and 100% of the adjacent exploration block. Well, joining us today is Geraldine Gerardo, the Chief Strategy and Commercial Officer for Corcel PLC. Hi Geraldine, how are you doing?
Hi Mark, nice to be here.
Yes, it's good to be speaking to you. I wonder if we can perhaps go over this acquisition here, because of course we spoke to Scott, the CEO, last time, and this is part of the strategy, I think the three-pillared strategy, but getting into some producing oil fields in Brazil. So just tell us a little bit about this oil and gas field, what you liked about it.
Yeah, so as you said, as Scott mentioned, one of our pillars is production. And the IRAI fields fit right in there. It is a legacy gas field. It has been producing, was discovered in 1963. There are 3 wells that tapped into very prolific hydrocarbon formations, the Agua Grande formation and the Sergi formation. And what we're looking to do now is to help the existing operator through this rights acquisition increase production. And in that process, see if we can take it all the way to its peak production, which is expected at about 1,000 barrels of oil equivalent a day. And adjacent to it, there is the Tuck T172 field. It's an exploration field, but it also has gas accumulations that are evident from recent seismic. And so we're excited about that.
So currently producing 117 barrels of oil per day, but with the potential to get to over 1,000.
Yeah. So the peak production is expected to be about 1,000 barrels of oil equivalent per day. With the 2 workovers that we're funding through this agreement, we should be able to take production up to about 200 barrels of oil equivalent a day, close to that. And so this really just starts to set the field back on the trajectory of getting back to its to the new peak production, I guess.
Okay. And there's already offtakes in place, effectively. There's already a buyer ready to take the oil.
Yeah, this is the exciting thing about this agreement. There is an off-taker. It is currently selling to one of the large Brazilian gas trading companies. So there is infrastructure in place in the field that's already connected to the buyer. And what is even more exciting is that it has got very good gas sales terms. And with every increase in production or an increase in capacity, there is enough offtake capacity from the buyer side, and there is an increase in price that comes with the delivery of more gas. And so the more we do on the field, if we're able to actually get that production up, then we're able to realize greater value.
Okay, well, I know it was highlighted in the RNS. You said that the move was a big milestone in Brazil, capitalizing on opportunities from Petrobras onshore divestments to accelerate acquisitions of producing assets. And as I said, last time we spoke to Scott on the 3 core verticals, that was the exploration in Angola, the producing assets in Brazil, and the battery and metals rare earths to drive the energy transition. So are we starting to see now that that strategy, if you like, being delivered with this first of perhaps many things to follow?
Yeah, this is certainly that path. On the production vertical, or at least from a strategy perspective, there were 2 key objectives for Corcel. One was delivering on production and revenue. This is one of those opportunities. The other was diversifying investor risk. And so this is all within the production vertical. In terms of the acquisition of production, what we were able to do is make sure that we were still on track in meeting the target we had already set. If you recall, we had 2 wells in Angola last year, Tobias 13 and Tobias 14. We had a few setbacks on those wells. They were supposed to deliver the near-term revenue. We are still doing work on those 2 wells, which is some engineering work and some additional G&G studies. What this option agreement provides us is now the second viable option to actually hitting the goal that we had set in terms of generating revenue near term. So that is pretty exciting. On the diversification of investor risk part, I think that this is also a significant milestone. Our goal is to actually have a very stable and dependable stock. for our investors. And what we believe here is by diversifying the country risk, we're actually spreading our investor risk. There is about 250,000 barrels of production onshore in Brazil. And this sets us up on that path. As you said, Petrobras divested these assets, and there's a secondary M&A market that has emerged, and we're tapping into it.
Okay, good. Well, that's exactly what Scott basically explained as the concept. So we're starting to see this come through. And just on the development plans here, so you've got the workover programs, and the way this is working is Corcel are actually loaning $550,000 to Petrobon in order to do these workover programs, and then you've got that option to effectively take over and invest up to nearly $3 million for a total sort of field development over years. And I think the RNS was talking about once you get into that cash flow and prove it, it opens up other avenues for financing once you can prove that cash flow. Is that right?
That is absolutely right. So the entire full field development plan for the IRAI field comprises of about 5 wells, 2 of which are the workovers that we're about to execute in January. Then the remaining are the 3 wells that are part of the full field development strategy, which come in later in 2025 and through 2026. The first well, which we will fund if we exercise the option, which is likely given our prospectivity or the prospectivity that we view from the field, that will come in 2025 around the first half. That is a critical milestone. If we do exercise that option, go on to funding that initial well, one that will increase the capacity of gas that is delivered to the seller, but more importantly, that will be the mark that actually delivers cash flow to Corcel.
Okay.
At that point, we will not, if we exercise just the small part of the transaction, which is 20%, we will be entitled to about distributions of 30% of the free cash flow coming from the asset as early as the time when we do the funding of that initial well. In 2026, we will then have 2 additional wells. These will be funded for about the tune of about 2.1 million, which is what you're talking about. But considering that at that point, we will already have cash flow coming from the field itself, this does open up different avenues through which we can actually fund this, whether it's debt financing, other forms of project financing. And that also allows us to do additional work in the TUG T172 license, which is adjacent. It already has, some seismic acquisition that was done recently, and we can expand a lot of that G&G work and try and tap into the gas accumulations that are already known in that exploration block.
Okay. So you're looking to start the workover program early next year. How long is that sort of scheduled to be going on for until you can get into cash flow? Because again, in the RNS, it said that the production is highly profitable with netbacks expected on investment within months. So if investors can get an idea of sort of what that timeline looks like, I think that would be quite interesting.
Yeah, there's a very short timeline. We have been working the deal and with the operator for a while now. So the workovers are scheduled to be completed by January of 2025. Our final investment decision comes right after in February. If we do exercise that option and make that final investment decision to proceed, we will then proceed to funding the first development well. Okay. Our cash flow distributions will start from any existing production in February 2025 or March 2025 if we opt into the block. And then as we progress and we start to increase production, then we are able to, progress. But I think the significant milestones for Corcel are the first quarter of 2025, where we have the completion of the workovers, the decision point, and from that point onwards, we fund the second well, but also would then have access to the revenues flowing from the workovers plus any existing production that is currently being sold, or any gas that is currently being sold in IRAI.
So if it all goes to plan, you'll be in cash flow Q1 next year. Have you any idea what that might look like? Is it too early to be talking about what that could potentially look like?
It is a bit too early to talk about that, just because we need to actually see what the results of the workover are going to be, and then we need to make our final investment decision. Okay. But what I think is worth highlighting is we now have 2 very viable paths to cash flow or revenue generation in Corcel. We still have the 2 wells that we drilled in Angola. That is still an exciting opportunity. And if we can get those to flow, we're still on going to go through the early production system that we had talked about.
Okay.
And now in Brazil, where we already have a cash generating field, this allows us to have a better path to meeting that goal.
Okay. And what are some of the risks that might, happen during this? We're going towards the Workover program, of course. If it doesn't go well, I'm sure you'll be considering whether you indeed follow through on that option exercise. But let's hope it of course, does go well. But what sort of risk analysis have you done? Have you been able to mitigate any of the potential risks here?
Yeah, I think you've just highlighted in your question. The first thing is we've actually mitigated the risk for investors by making sure that our decision point comes after we've gone through a work program. But the reason we chose onshore Brazil is because there is 250,000 barrels onshore. It is a very known hydrocarbon region, so there is very low subsurface risk on the onshore. There is low risk in terms of development drilling. There are a lot of service providers as well, so the costs are also relatively mitigated. It's a producing asset that has an off-taker, and that has an off-taker with a lot of capacity to take additional gas. And that in itself also mitigates the risk. The gas price is tied to Brent. And so there are things, if you look at market risk, it is the price of Brent that we're looking at in 2025.
Okay.
But as for the opportunity, and the risks are mitigated, and we're just left with normal market risks that you'd have with any other opportunity.
Okay. And will this be the sole focus of the team and Corcel for the next sort of 3 to 6 months, or can we expect some other assets to be brought in, or other elements of those 3 verticals to be communicated?
Oh, there will be a lot more exciting news coming from Corcel. I think we've done a good job consolidating our portfolio in the last couple of months. We have now set ourselves on a path of actually moving a lot of the pipeline of business development opportunities forward. And so we look forward to getting back and then talking to you about some of those when they're announced.
Okay. Well, thank you very much for your time today, Geraldine Gerardo, the Chief Strategy and Commercial Officer at Corcel PLC.
Thank you, Mark. Always a pleasure talking to you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.